Cyber risk. Not just an IT problem, but what does a treasurer need to know and, more importantly, do about it? In June of this year, IBM published a report, and it stated that the average total cost of a data breach for a company was $4 million. And the likelihood of a company having one or more data breach occurrences in the next 24 months was a 26% probability of a serious data breach. In today's webinar, we're going to hear about the digital revolution, cyber attacks, the liquidity and capital impact of cyber risk, and what you in the corporate treasury function should be aware of and, more importantly, actioning as in relation to cyber risk. I'm Michelle Price, Associate Policy and Technical Director here at the ACT. On my panel today, I've got three cyber experts. Nick Burge, Managing Director, Head of Global Corporate Structures and Regulatory Solutions at Lloyds Bank. Next to Nick is Giles Taylor, Head of Data and Cyber Security, also at Lloyds Bank. And finally, Rick Cudworth, a partner at Deloitte and the Resilience and Crisis Management Leader. First of all, let's talk about the technical points for our webinar today. There should be a menu bar across the bottom of your slide that allows you to open various windows, and you can move around these on your screen and resize them and minimize them as you need. There's also a yellow button with a question mark on it for help if you have any technical difficulties. There's a Q&A button, and this opens a window where you can submit questions, which we'll take on an anonymous basis. So please do send questions in as you go along. We'll have a small number of slides, and we'll put these up during the webinar. If any of them are hard to read, you can maximize these in your window. And just to let you know, there will be a recording of this webinar available for you in 2 days' time. So each of our speakers is going to give a brief presentation, and then we'll open it up to the questions and answers, or questions, should I say, that you send through. So please start sending them through now. Giles, why don't we start with you?
Great, thank you, Michelle. So let me start off by just saying how today we're going to sort of go through a little around the cyber risk. So many of you, I'm sure, will be aware of the impacts of cyber to you, particularly in the Treasurer's department, and some of the risks you will have seen around fraud. But the cyber threat goes far beyond fraud, and what I want to do is take you through how it may affect your individual companies. So pretty much every company, whether they realise it or not, are going through some element of a digitisation agenda. And with that, it means that we really need to understand the broader impacts of how technology is going to impact on your business, and therefore what you as treasurers need to understand to manage the associated risks. We at Lloyds believe that all companies that go on a digitisation agenda are likely to be more successful for the future. But only if they really understand and determine the associated risks with that journey. So looking at some of the trends that we see these days, one is around hyperconnectivity. So hyperconnectivity is the way that everything these days seems to be connected electronically. Whether you're talking about operations centre that you have diversified across the world in Asia, in the US, in the UK, whether you're talking about the revolution that's happening with the Internet of Things and all sorts of devices that we never thought before would be connected to the internet now being all attached into this massive complex structure. So some of the challenges that historically didn't exist now suddenly come to the fore. If you before had a typical event against your company like a fire or a flood, it meant that your locations across the world would protect you from that event. However, in this new technological revolution, now it means that an attack against your UK centre of processing of data or manufacturing, that the same attack could be replayed geographically across to the US and Asia. And because the technology stack that you rely on is the same in each one of those locations, most likely, it means now that an attack against one centre actually could, in effect, propagate very quickly across to the rest of your operation locations. So the potential impacts that this has to business, given that hyperconnectivity, really is exaggerated greatly. We also see that lots of companies are using big data now. We're moving towards that big data revolution. And with that, that means now that we're consolidating all of our crown jewels of our business, whether that's intellectual property, whether that's customer data lists, whatever it may be that's critical to your business, we're putting in one place. So we start to expose this concentration risk now, that one area within your business potentially holds a whole set of data or assets that are key to revenue generation. And if those assets were to be compromised, the impacts to business could be very, very large. So we're really moving into a new world of understanding in terms of how big data will impact on business. And as I talk about concentration risk, it's just interesting to understand now how many different businesses rely on certain types of technology and the type of concentration that you get. So we all use, for example, maybe one type of system or service to run a particular process within our organisation. That now means that if there are consequential dependencies on that, you only have to have one technology component potentially break or compromised within that system, and the impacts to your business could expand exponentially. So understanding a business, what generates revenue and how it's connected to technology, is key to understanding the potential financial impacts to your organisation, and therefore some of the cash that you would need to hold to prepare for that eventuality. And my colleague Nick will talk to us a little bit later in some more detail on that. The other things that we see is a whole host of new technologies that are coming along around automation, around digitalisation, and around the Internet of Things. Now, these provide great opportunities, but again, if we don't understand the risks that are associated to them, that potentially causes a big impact in terms of whether we've planned appropriately. And what we see is that companies that understand their risk profile and plan appropriately and have business response plans, if they are well prepared ahead of a cyber attack, the impact to them and their success in terms of surviving that event increases dramatically. So the response to a cyber event, including your financial response, is absolutely critical to your ongoing success. So I suppose there are many different types of cyber attack, and if we look now and decide whether cyber actually is a black swan event anymore. So I think in the past, lots of people have thought this is never going to happen to them. And I think what we've seen over time is that there have been lots of events that are very small and didn't necessarily hit the big sort of risk radars. But over time, the number of events that are material has dramatically increased. And if you look at the timeline on the slide, we can see many large organisations that have had substantial impacts that have gone into the media, which are very difficult for companies to deal with and have large potential financial impacts associated to them. But I think there's sort of two types of attack that we see. There's some very large-scale obvious attacks, so you see particular large data breaches where it's very apparent that issue has happened. But we also see there's a very large number, probably 80 to 90% of attacks that fly under the radar. It's not really apparent that they're happening. So small amounts of data leakage where small volumes of customer data or intellectual property or know-how of the business is exfiltrated from the business but has a large ongoing revenue impact, and we could see demise of companies over a period of time. And as we see here, it's really no longer a black swan event, so we need to think about it and plan about it in a different way, and this problem no longer just sits in the IT department. So considering for your business and understanding the linkage to technology, particularly if you have safety critical elements to your business, could have very large ramifications financially if something were to go wrong. And understanding that perspective in addition to how it affects you directly as a treasury department, I think is absolutely key to the ongoing profitability and survival of businesses. And I think Rick from Deloitte here will be able to sort of expand probably on some of the points that I've been making.
Giles, thank you for that. I think, yes, just picking up on two or three of the areas there. I think firstly, You touched on the sort of never the black swan event there on the slide, and from my perspective, if I look back over the last 10 or so years, if I went into a boardroom and was talking about security and the risk of a security event, the usual response, well, it would never happen to us. I think then if you move forwards in the last 5 years, it became, well, if it happened to us. Today, the conversations at board level are very much more in the realms of when it happens to us. So I think that is a big move, and it reflects the nature of the events we've seen. The second thing I think, Giles, you touched on was around concentration risk and that sort of total loss scenario. I think I would add to that around the cyber sort of risk we're facing as well. Some of these events can have very long recovery times and a significant cost associated with recovery as well, which I think brings us into a whole new realm. And again, we can touch on that a little bit later when we talk about financing. The third area I'd touch on is the reputational damage, and it's particularly significant if the cyber attack is perceived as avoidable, and it can be quite substantial. You'll have seen the high-profile events, and some of them are listed there on the slide. From my perspective, though, I think it's also worth just turning this and looking at it from your customer's perspective. So what's it mean to them, and how does it matter to them? And even in your industry, in banking, for example, Giles, this phone here, if you look at the millennials that have come through today, this is entirely how they do banking. They have no other means of banking. They are totally reliant on this. If I look at my generation, our generation, we're probably used to using multiple channels for banking services. So we have a bit more inbuilt resilience about how we might access and the way we're impacted as a result in terms of a failure, say, on banking systems. But you do need to look at it from the customer perspective, I think, really understand the impact from there.
Nick,
so expanding on Rick's point, cyber is now a risk that needs to be looked at as part of your overall risk planning. It's a board level consideration. As Giles said, it's not just an IT department issue. The IT department will be defending against cyber attacks of various forms, but one has to plan for a cyber breach will occur and something will get through. So you then need to look at it within the risk landscape of your business. So the slide we've got here shows the large external risks. So this isn't business specific. It's a pull from the World Economic Forum risk report. So this is the 2016 view of the attendees at Davos in terms of what are the major external risks in terms of the global economy. So on the chart it shows risks, the higher up the chart, up the y-axis is the impact of the events. At the top it's the most impactful in terms of the world economy. And then as we go left to right, it's the likelihood of that event happening, that risk occurring. So we can see that cyber attacks, that's right up there in the top right quadrant. So high impact potentially on the world economy and high likelihood. And that's certainly something we're seeing with our discussions with our clients. It is now a boardroom strategic issue. It's there in your overall planning, and within the treasury functions you have to look at the financial consequences of a cyber attack. So in terms of kind of how does it impact the business, all of these risks are hard to model and hard to predict, but you start from that perspective that something may occur. So whether you're a digital-based business where if you're taken offline, the revenues stop immediately and you have substantial financial consequences racking up, or it could be you're in a business that's not directly a digital business but has reliance. So we were talking to one of our manufacturing customers a couple of weeks ago. They had a cyber attack which impacted on their database in terms of where deliveries to different customers were going to be occurring. They weren't able to deliver anything. So the production lines are rolling and products coming off the end, but they're just stacking up at the end of that line, and deliveries not occurring, revenues dry up, etc., etc. So how do you plan for it and model it, and how do you put it in the context of financial and specifically a cash consequence. So we've got a simplified schematic here which shows the cash need of a company, of a business, and this isn't business specific, this is a general theoretical business. So the cash need and the probability of the cash need. So as you look at that cash need against the risks, on the left-hand side you have, the more easier to model your business-specific risks. So it could be a delay to payments, it might be a downturn in your sales. Those will be all part of your traditional business planning and cash management planning. As we go to the right-hand side, it's lower probability, but more substantial cash need and potentially a capital impact as well. So we've put cyber on here twice because we are recognizing there are the small-scale cyber events which may result in a substantial but not colossal cash need. But then as we go to the left-hand side, there are those potential major cyber events. So it could be specific to your business, and Giles showed some of the ones that we've seen through the media, or it could be an external event either to your clients, to your suppliers, or to the overall system as a whole. And at the bottom, what we have here are the liquidity and then potentially capital tools that you'll be looking at to manage that cash need. So obviously on the right, you've got your cash, your working capital management, your sort of day-to-day BAU cash management. And then as we go right, the other ways of raising additional cash and having modeled the consequence of that cyber event, how much cash might you need. So short-term investments may come in, it could be your backstop or your committed banking facilities. It could require issuance of debt, but one of the consequences may be inability to issue debt. And then you're looking at what's the overlay of insurance contracts you may have in place. And then right at the end, potentially disposals of assets or an equity capital raise. And I think handing back to Rick, you'll be seeing a lot of this in your clients as well, won't you?
Yeah, Nick, certainly I have. I've sat in and advised on quite a number of crises, and I think one of the things that is very noticeable is just the draw on cash it has, both immediate and longer term. And I think this chart that you have here very clearly illustrates, a major cyber event is, I think, both a short-term but also a long-term draw on significant cash. And from my perspective, I think in dealing with any crisis, actually, but including cyber, being able to keep the business funded is one of the absolute vital requirements, because what you don't want to do is create a funding crisis on top of the crisis you're already dealing with. So I think that's the challenge, and I think that's where the treasurer's role really becomes so important in any crisis, but cyber, absolutely.
So if we were to try and put some numbers on that, I mean, the IBM report I mentioned talked about 4 million as the average size. We're looking at the small cyber breach on that chart compared to a major cyber breach. What types of numbers are we talking? Is it always in the millions? Can cyber breach in the thousands? And then can we give some idea of numbers?
Depends on the scale of the organisation, but it can certainly, for a large corporate organisation, it can be in the multi-millions. It's well documented in terms of the Sony case study, just how much that has cost that business over time in terms of the cash requirements. So I think it is absolutely not uncommon for organisations that are in a crisis to face, perhaps there's a shortfall in revenues, but there are significant costs involved in dealing with the crisis. And the costs of dealing with a cyber attack are significant, whether you're having to pull in external experts, whether you're having to deal with customer redress issues. But that draw on cash is quite significant. And I think unless you have the sort of buffers and access to cash to keep funded, then you're in danger of creating an existential crisis on the organisation.
I think, sorry. I mean, just to add to that, and because it will be very difficult to scale the number, I think particularly in the Treasury Department, you're thinking of it in terms of a cyber attack of some sort occurs, but looking through the business model and what are the impacts on your business and the way things operate. So does it shut down your delivery systems? Does it ruin your database so you actually don't know who your clients are? Does it create somebody takes your data and you then have the fines and the consequences of that? So having modelled through what might happen and what the consequences will be will kind of determine how much cash and facilities you think you need.
And I think the key thing is looking and understanding the likely types of fines that you could have. So we see particularly that the first thing is the cost of the initial event and responding to that, and there's a lot of IT costs that are associated there that, again, you might be able to get some idea given the scale of the IT infrastructures that you run. The second thing that Rick noted was around customer redress. And again, this depends on the type of business you're in, whether you're likely to do product recalls, whether you're likely to, particularly in financial services type organisations, have to do direct customer redress to bring them back to the position they were previously. But then it goes beyond that and into some of the regulatory fines that go along with that. So most organisations will be a party to the new EU General Data Protection Regulation. And as part of that now, if you have a large data breach of personal information, the fine associated with that is a maximum of 4% of global turnover, not profit, but turnover. So that starts to give you an idea of the sorts of figures that you can understand for your organisation would be within the regulatory fine space. That then goes beyond and obviously now into the impact on your revenue streams, reputational and brand damage. So you can start to build up a picture of this dependent on or based on your organisation's business and revenue.
Charles, you touched on in your presentation that there are different types of cyber attacks. Can you give us a feel for what are the most common cyber attacks for corporates?
Sure. So I think that the type of attack depends. So particularly in the banking sector, we've seen a large number of what's called distributed denial of service attacks. So this is where tens of thousands of computers are recruited, in effect, through a criminal network to then come and access data from your website all in one point. And your website can't then basically cope with that volume of requests, and it shuts down, a bit like trying to put sort of 2 million cars around the M25 within a few seconds. It all grinds to a halt. And that attack could be against your core website, or it could be against anything that is on a digital platform, if you understand how to craft that attack. So we see lots of those type of attacks against banks, and we've spent lots of money to make sure that hopefully in all events we can reject those attacks. The other thing that we see, which is rising in trend, is what we call ransomware attacks. And this is where your organisation will receive a note basically saying that a criminal gang or some organisation, most likely here they're trying to monetise the cyber attack, that unless you pay up, usually within the Bitcoin domain, because that gives them some anonymity in terms of receiving the cash, if you don't pay that ransom, that they will then either go in and attack and do a DDoS attack, as we just discussed, against your organisation, or the other thing we're seeing increasingly is what it's called cryptoware. So this is where they encrypt or muddle all of your data so that it's no longer accessible to you. And unless if you pay the fine, they won't unlock that data. Now, obviously, now you're into the realms of ethics and funding criminality if you pay that, but at the same time, if you don't have the organisational capability to reject that attack, sometimes it puts organisations into a very difficult dilemma.
Okay. Yeah, I'll just add to that. I think we run a cyber intelligence centre for several of our clients, and through that, we're often involved in sort of identifying potential attacks and responding and defending. The ones we come up most commonly absolutely are still the denial of service, although I think organisations typically are getting much better at handling and dealing with those and better at protecting them as well from that. We clearly see the ransomware and the sort of crypto locker scenario is there. Still more commonly, I'd have said, it's ransomware on an end user. But the other two I think that are important to flag would be sort of more low-level generic phishing attacks. You probably all have had those yourselves. It is common. They're getting increasingly sophisticated and difficult, and more difficult to determine, is this real or not. So I think that's a clear area. And I think the final area is actually just the accidental or indeed the third-party compromise of your data. So just a data loss, but it's either internal, accidental, or it's a third-party risk around that.
Okay, great. A very specific question that's come in is I'm encountering a number of companies' websites where the initial sign-on page isn't secure and doesn't have the HTTPS security padlock. This person thinks such businesses should take the primary responsibility for the fraud. They are interested in your views on that. So this is where a website doesn't have the padlock. Any thoughts on that? I'm not sure.
Liability is always a very difficult topic. I mean, certainly from a banking perspective and more in the retail sector, there's been a lot of discussion at a government level whether the banks should actually stop paying out if it's shown that, in effect, the retail customer is being negligent in not protecting their data. And I suppose this is another sort of form of negligence in terms of not securing your website appropriately. I think the challenge here is more one of, I suppose, business acceptance and what's the norm. I don't think there's an easy and straight answer to it. I think everyone needs to be encouraged to be as secure as possible, because in any event, the costs are passed through the business system, let's call it. So we all should be doing our best to make sure that we keep everything to the best level we can of security.
I think I'll just add as well. I think what is clear to me is I think the customer or consumer tolerance, the regulatory tolerance, and even the political tolerance for what I would term avoidable scenarios where clearly the right sort of good practice of security has not been applied. I think that tolerance now for cyber attacks in that event has diminished substantially. And I think the reputational damage to any company that suffers a breach because its security defences just weren't up to scratch, that is now going to be very, very significant. So I think the landscape has changed and is continuing to change.
Okay, Giles, you mentioned fines. People are curious to know how common it is to pay a fine.
So I suppose it's a difficult question to answer in terms of the new EU General Data Protection Regulation, because it's not effective yet. It's, I think, off the top of my head, May 2018. The existing fines from the Information Commissioner's Office, when you're talking particularly around personal data, is generally sort of much lower. And Rick may have better figures than I do. I think off the top of my head it's around sort of 500,000, 200,000.
Not sure.
And Rick has no further figures than I do. So I think it was in those bounds. Yeah. There could be other industry-specific fines. So again, I think it depends particularly whether you've lost personal information, whether you've lost other sort of critical data, and whether you're seen to have been negligent as well. But the fines haven't been that large. But I think this will change dramatically when the new EU General Data Protection Regulation comes in, and hence why many companies are investing many millions to make sure that they do everything they can to be compliant.
Yeah, I think that's to my point around, yes, the regulators there, and that the increase in fines for the EU directive is very significant. But I also say the tolerance that people have generally to, if you're holding customer data but are failing to protect it in what is, seen as a good practice way, then you are going to be highly vulnerable to fines and reputational damage.
Okay, another question that's come in, and Nick, I think this is for you. How should I be thinking about my liquidity position as a corporate, and how do I model the liquidity risk and capital risk?
I think really, as we talked about, you're starting with the board and then through the finance function, the treasury, to put cyber in there with the other risks that the business may suffer. And obviously business to business, often the other risks will be different. But cyber's going to be fairly consistent across the piece, because really hard to think of any business that doesn't rely on IT, software, digital at some level. So it's factoring in, if, for example, your systems are taken down, what happens to your business? Does it cease functioning? Do you stop selling things? Do you stop making things? Add on the fines, etc. So you build up that picture of what happens to your business. Also, how quickly you think you can recover. Do you have backup facilities, alternatives, and then what's the cash consequence of that going to be? And depending on the business you're in and the modelling, there may be an amount of resources you can hold against that, or insurance you can buy, but it may be, there will be potential events that you can model that you'll write into capital disposals and would be looking at a consequential equity event.
So is it typical for the corporate treasurer to be sitting at the table when these types of plans are put together?
I would think, it will again depend on the company, so they may not be there when you're designing the IT defence network, but absolutely in terms of the planning for if that defence network fails, and the plans have to be that it might. Yes. The post-breach plan, absolutely, it's part of the risk management of the company.
Yeah, I would say actually it's perhaps been atypical for that to have been in place, but it's becoming more typical. I think we're definitely seeing the CFO and the Treasurer at the table day one, but I think also important, we're starting to see much more focus on, actually we ought to have a crisis liquidity funding plan. So if we are in crisis, we know how we would access finance, what sort of levels of finance, where we get it from, etc. So I think that aspect of planning and preparation is really important.
Okay. Another question, well, there's lots of questions coming in. I guess that ransoms are commonly paid in bitcoins to avoid tracking criminals down. Can we easily, fully track a ransom paid into any bank account with all this KYC in place? Should be easy, shouldn't it?
Unfortunately, the reality is that they very quickly move the cash on, and quite often into foreign jurisdictions. And so if it gets paid into a bank account, they will generally shift that very quickly. And following the trail from one bank account to the next, unfortunately, generally they can move more quickly than we can manage to move ahead of them. And if it goes through jurisdictions that we don't have friendly ties with, then that causes particular challenges as well. Because this is a truly global problem. It is not geographically confined to the UK or Europe or the US.
Okay. For a company thinking about partnering with a fintech, what sort of safety measures can they take to ensure they have taken all the appropriate measures to prevent a cyber attack? Gosh, I'm not sure we can answer that, but...
Well, so I suppose the first thing is most cyber attacks use the basics to be successful. So if you look at government advice, or we're launching or launched last month a CB, a commercial banking cyber guidance brochure, which gives a whole host of guidance as to what companies should be looking at from both a technical perspective, but also more from a governance and risk management perspective. We give a lot of guidance as to what companies should be looking at. Now, if you address 80% of the sort of key controls that we would put in place, you're going to be in a far better place. So the first thing is concentrate on those basics. The other thing is make sure that the people in that business understand the threat against them. But really, I suppose it comes down to understanding, what are you using that business for? What's the business exposure for you if they were to go down? What's the exposure to your business in terms of the data that you are sharing with them? And also, how connected are they to your systems and services? So do all of their vulnerabilities in effect become your vulnerabilities, or if you somehow got some segregation so that you're not directly impacted or not so much? So I think a lot of this is around some of that assurance. It's also around some of the contracts. But again, there's a reality here that if you're partnering with a fintech, probably putting unlimited liability in the contract, if you could ever manage to persuade them to that, obviously they only have the funds that they have before that legal entity folds. So this is where you then maybe look at other instruments. I don't know if Nick or someone's got thoughts further on any of that.
Well, I think I'm slightly ducking the instrument question, but I think that question does bring about you. So you can have the finest cyber defences in the world within your company, but again, all companies are dealing with other companies and often with individuals, so you are also vulnerable to how good their defences are. So in the most simple terms, you're making a supplier payment out. If somebody has breached your supplier, and that payment gets directed somewhere else, well, you've been impacted, or certainly the second order, you've been impacted. If one of your big suppliers goes down because their production line stopped rolling, again, you've been impacted.
Sure. Okay, another one. Does a cyber crisis pose a different challenge to any other type of crisis?
Absolutely.
Yeah, well, I think it does in many ways. I think, first of all, the ambiguity, the uncertainty over perhaps a prolonged time in terms of the nature of the attack, what may be out there, what's happened, creates a real challenge in decision making at senior levels around the response to it. I think the second thing is inevitably speed of the flow, the impact on reputation. We've talked about the concentration risk as well. Those aspects of the ability to create a large, wide-scale impact very, very quickly is quite different to, say, typical crises which are much more geographically or physically located. Cyber has no boundaries and can impact much more widely. So those are clearly aspects. I think we've touched on as well the recovery process from a major cyber attack, the cleanup process that you need to go through can take many months. So you can be without key systems for a long period of time. And typical sort of IT disaster recovery planning really hasn't taken, historically, these types of cyber scenarios and the long-term recovery and cleanup operation into account. They are much more about a technical failure and then failing over to another system. That type of planning may well not hold good for a cyber attack scenario. So there are multiple differences from a technical level in terms of response right up to, I think, the executive level in terms of decision making and response strategies.
Okay. Now, we've touched on this, but what are the corporate risks, especially when using banking systems and them being attacked? And, the person saying, what if a corporate had a large urgent payment that had to go out that day? So what are the corporate risks when using banking systems and the banking system being attacked? What can treasurers be doing about that?
I suppose that the biggest risk from a treasurer's perspective is that your systems and services get attacked and you give us an instruction from an authorised individual, which we then pay in good faith. And I think that the challenge we have is any system is only as good as its weakest link. And I'm sure lots of your organisations have invested a great deal to make sure that you are securing your environments too. And likewise, we have spent many, many millions as both an industry, as a financial services industry, but also as an individual bank in really protecting that core key asset of our payment systems and services. And what we see at the moment is a lot of those, the risk sometimes actually still lies with the clients who haven't understood necessarily around the people aspects of this too. So people, or a lot of individuals, think that cyber is an IT problem, and again it's a business problem, but it's more than a business problem, it's a people problem too, that we've seen particularly with things like the phishing attacks that Rick was alluding to earlier. They will target your department because they know that you have access potentially through to cash. And so I think part of this is making sure that all of your staff are really aware that the types of attack that could be specific to you. And so specific spear phishing attacks, so spear phishing is where it's directed at individuals, understanding therefore that employees or colleagues in your company, if they have excessive information out on the internet around their job and their job role, that makes them a particular target for criminals to go after, because they know that they'll probably be the people who have access to make the payments. So that awareness and making people, I suppose, aware of the new way of the world is the first step, which then hopefully reduces the likelihood they are to be spear-phished attacked. And then secondly is understand, or getting your colleagues who have that access to those systems and services to understand around the threat and what they should be looking for and the sorts of things that could happen so that they can best respond as individuals, because your people are part of your defence strategy.
Yeah, if I could just touch on that people one, I think interestingly, just a few weeks ago, I was at a government briefing around cybersecurity, and as well as, and I think you referred to earlier, Giles, the Cybersecurity Essentials program that government has, and the accreditation you can get around that, which I think is a sort of basic level of goods security hygiene that people should get to. The other major focus they were putting on was around people. They are really encouraging corporates to get to much better understanding around culture and behaviours relating to security, and to understand the current position and to raise the game in that respect, because they see that as the weakest link as we go forwards.
Okay. There's a question here on insurance. Is there affordable and suitable insurance against cyber attacks?
There certainly is, yes. So there's a growing market for cyber insurance, and the capacity of that market has grown substantially, particularly in the last couple of years. And there's obviously an upper limit, but you can get hundreds of millions of pounds of cover of insurance. Of course, it's a matter of putting insurance in the context of your other sources of cash and liquidity, and also recognising with insurance that insurance tends to be slow in terms of paying out on cash. There's always a period where things get investigated, so you often can't rely on the insurance for the immediate cash you're going to need.
Okay.
I think there's one other point on insurance that is key as well, and that is a lot of organisations may consider themselves to be covered within their sort of general insurance policy that they have as an organisation, but unfortunately quite often the terms are not very specific, and at the moment it may be unclear whether you have coverage or not. So I think really understanding what is covered within that policy so that you don't get into some sort of lengthy litigation at a later date when there isn't clarity is key, and I think there's a lot of obligation on the insurers as well as their clients to make that clear, and I think that's happening over time, but it's something that you may wish to consider looking at.
Okay. I think there's a lot of questions. I'm sorry, they're flying in and I can't get to all of them because there's too many of them, but I think it's time to wrap up. So first of all, thank you to my excellent panellists, Nick, Rick and Giles, and also to Lloyds Bank for their sponsorship. Secondly, thanks to everyone for joining today's session, and I hope you found it as thought-provoking as I have. As I mentioned at the start, we'll be putting up a recording of this webinar on the ACT's website, along with the presentations, and you'll be sent a link to that after the webinar today. And finally, if you can spare a moment to provide some feedback on the webinar, we'll be very grateful. And there is a survey widget on the bottom bar of your screen, and the facility to click on this will be open for some time after the webinar. We've got a number of events coming up. Let me just click to that slide. Here we go. So we have the Working Capital webinar that's on next week. We've got our annual cash management conference in a month's time. And we've got our annual conference in May. So from all of us here, I'd like to say thank you and goodbye.